UWM is waiting at the altar, the string quartet is playing, and Two Harbors just sneaks out the back door with cross-country mortgage.
You're over-dramatizing a delayed proxy vote. It's a calculated fiduciary pause, Nate.
A fiduciary pause? The board is already calling it a superior proposal. It's a corporate soap opera.
I call it a rational bidding war. Plus, we've got Apollo dropping $3.7 billion on Japanese glass, and Netflix buying Ben Affleck's AI startup.
Wait, Ben Affleck had an AI startup?
He did. Now Netflix does. First up, Apollo. The rundown.
$33.4 billion. That's just an absurd amount of capital to deploy on a random Tuesday.
GIP and EQT swallowing AES Corp whole. Honestly, when you have infrastructure titans with that much dry powder, they have to hunt elephants. You can't move the needle buying middle market solar farms anymore.
It's the ultimate club deal. It completely gives me flashbacks to the 2006 mega buyout era. Just a bunch of guys in fleece vests stacking leverage.
Except the debt markets actually care about cash flow now, Nate. I'm much more interested in Gilead dropping $1.68 billion on Ouro Medicines.
T-cell engagers for autoimmune diseases. The analysts are absolutely eating up the BCMA-XCD3 angle. It sounds like a router password, but I guess it's the future of medicine.
It's actually brilliant biology, but if you read the footnotes on the release, that $1.68 billion is heavily backloaded with clinical milestones. The upfront cash is a fraction of the headline.
Classic pharma bolt-on. You de-risk the downside, but still get to issue a $1 billion press release. Now, speaking of press releases that read like science fiction, we have to talk about Netflix.
I was really hoping we could skip this one.
Netflix is buying Interpositive, an AI filmmaking startup founded by Ben Affleck. You literally can't make this up.
It's pure buzzword salad. I guarantee the pitch deck was just the letters A, and I printed over a picture of a robot holding a script.
Oh, come on, Maya. It's actually a smart narrative play. Netflix needs to signal to Wall Street that they own the future of the production pipeline. Affleck gives them the Hollywood credibility.
Wall Street doesn't care about Ben Affleck. They're buying a celebrity vanity project just to drop the acronym AI 50 times on their next earnings call. Show me the actual patents. I bet there's zero proprietary tech there.
You're just mad you didn't get an invite to the wrap party?
I'm mad about capital misallocation. Give me something clean. Like Olympus Partners selling EyeSouth's retina business to Cencora for $1.1 billion.
Nice pivot. Yeah, a clean carve-out.
Exactly. Cencora gets specialized distribution, Olympus gets a clean exit. No celebrities, no robots. Just a solid multiple.
Well, if you want a solid multiple, you're going to love what Apollo is doing in Japan. $3.7 billion for legacy industrial glass.
Finally, some real assets. But first, we need to talk about the absolute soap opera happening over at Two Harbors. The big one.
$3.7 billion for a glass company?
Not just any glass company, Nippon Sheet Glass.
Apollo is basically buying the windows of Japan.
It is their biggest private equity play in Japan to date. And honestly, my first thought reading the press release was just, why?
Oh, come on, the macro thesis writes itself here.
What? Enablers of natural light?
Very funny. No, you have a weak yen. You have these new corporate governance reforms in Tokyo pushing companies to unlock value. And you have legacy industrial giants trading at massive discounts. It is a classic PE setup.
Sure, if you are buying software or logistics, but operational restructuring in Japanese heavy industry. Apollo is famously aggressive. Japanese corporate culture is famously consensus-driven. That is a culture clash waiting to happen.
You think they cannot execute?
I think laying off legacy glass workers does not go over well with local regulators. I read through Nippon's last 3 annual reports. The margin compression is brutal. Energy costs are eating them alive.
But that is exactly why you bring in a shop like Apollo. They are not paying $3.7 billion to make friends. They see serious fat to trim.
Trimming fat is one thing. Changing the fundamental cost structure of glass manufacturing in a high energy cost environment is another. You cannot just financial engineer a cheaper furnace.
I completely disagree. Look at the playbook. You carve out the underperforming European divisions, you optimize the domestic supply chain, and you squeeze the procurement contracts. It is textbook.
Textbook for a mid-market US manufacturer, maybe. This is a massive entrenched institution. I am looking at the debt structure they are taking on, and the math only works if they expand operating margins by at least 400 basis points in 2 years.
Which they will.
By doing what? Selling shinier windshields?
By aggressive consolidation. Do you know how many fragmented glass suppliers there are in Asia right now? Apollo is not just buying a company, they are building a regional platform.
A highly cyclical, insanely capital-intensive platform. I just do not buy the multiple. 3.7 billion feels incredibly frothy for a business that literally shatters if you handle it wrong.
Okay, I'll give you points for the glass pun, but you are ignoring the real hidden prize here.
Please enlighten me.
Real estate? Look at the industrial land Nippon Sheet Glass owns across their manufacturing footprint in Tokyo and Osaka.
Now you're sounding like a banker again. Asset stripping.
Hey, I cannot help my roots. The land value alone probably covers half the equity check. Apollo knows exactly what they are doing. They spin off the real estate, do a sale leaseback, and suddenly the return on invested capital looks amazing.
I will believe it when I see the actual restructuring filings. But speaking of sudden realizations of value and people getting left at the altar.
Oh man, the Two Harbors drama.
Exactly. UWM Holdings thought they had a ring on it, and Cross Country Mortgage just kicked down the church doors. Voices.
So I am reading this morning's analyst notes, and someone actually wrote that Corvex's all-stock merger with Movano is a, quote, textbook strategic pivot to capitalize on the booming AI infrastructure sector.
Oh, please. Textbook strategic pivot? It is a $40.2 million capital raise dressed up in a trench coat of AI buzzwords.
Hold on, 40 million is real money. And they are actually repositioning the assets. It is not just a press release. They have to start somewhere.
Nate, you are sounding like a banker again. Look at the structure. It is an all-stock deal. They are using inflated paper to buy a narrative. I dug through the footnotes last night. There is zero actual infrastructure there yet.
Fine. I will concede the AI label is doing a massive amount of heavy lifting here, but the market loves a pivot right now. You cannot blame the board for giving investors what they want.
I absolutely can and will blame them. It is lazy. It is like Netflix buying Ben Affleck's AI filmmaking startup.
Wait, really? Ben Affleck has an AI startup?
He does. Interpositive. And Netflix just scooped it up. We are living in a simulation where every deal has to have the letters A and I in the headline to get funded.
Okay, fair point on the hype cycle. But let's look at a deal with real science. Gilead dropping $1.68 billion for Ouro Medicines.
Now that is a real transaction. The commentators are calling it a perfect move to capture the emerging T-cell engager space.
BCMax CD3 specifically. Try saying that 5 times fast after 3 coffees.
I absolutely will not. But the premium they paid actually makes sense when you look at Ouro's phase 2 data. No buzzwords required, just solid clinical results.
Exactly. Though speaking of corporate phrasing, I have a new favorite term for you. Company superior proposal.
Ooh, is this about the drama at Two Harbors?
Oh, it is. UWM Holdings is getting left at the altar, and the proxy filings are getting incredibly spicy. Spill the tea. You can't tell me you didn't laugh when you saw the Two Harbors press release this morning.
I gasped. I actually gasped into my coffee. Postponing a special stockholder meeting the day of the vote? That is prime corporate reality television.
It's beautiful. UWM Holdings is literally standing at the altar. The guests are seated, the music is playing, and Cross Country Mortgage bursts through the chapel doors screaming, "I object!"
And the Two Harbors board is already batting their eyelashes at them. They put out a statement calling Cross Country's 11th hour bid a potential, quote, company superior proposal.
Which is banker speak for, sorry UWM, but this new guy has a nicer car. You've got to respect the absolute ruthlessness of Cross Country waiting until the final seconds to drop this. It's a masterclass in timing.
See, I completely disagree. It's not a masterclass, it's just messy. If you're cross country, why wait? You risk the proxy votes already being locked in. And if you're the Two Harbors board, you look totally asleep at the wheel. You let UWM spend months on integration planning just to yank the rug out.
They don't care about UWM's feelings, Maya. They care about the premium. If CrossCountry is throwing more cash on the table, the board has a fiduciary duty to suddenly develop amnesia about UWM.
Fine, but I need to see the actual math before I crown CrossCountry the winner here. Talk is cheap, especially when you're crashing a wedding.
Well, we'll see the math soon enough.
Exactly. I'll be refreshing the SEC regulatory wires tomorrow morning to see the exact financial terms of this supposed superior proposal.
Same. And while we're on Deal Watch, keep an eye out for D-Bag Fund 8. They should be finalizing their buyout of HIP Technology Group any day now. Tomorrow's radar. What? I'm still thinking about the absolute chaos over at Two Harbors. Postponing a shareholder vote at the literal 11th hour?
UWM Holdings is sitting at the altar right now, checking their watches.
Exactly. CrossCountry Mortgage swoops in, and suddenly the Two Harbors board is throwing around the phrase company superior proposal.
Which is exactly why my eyes are glued to the SEC wires tomorrow morning. I need to see the actual financial terms of this cross-country bid. Until I read the filings, it's just corporate theater.
Oh, come on. The board wouldn't delay a vote unless the premium was massively better. They know the legal risk.
I've seen boards do dumber things. Speaking of Hollywood theater, did you see Netflix just bought Ben Affleck's AI startup?
Inner positive. Yes, the simulation is officially broken.
We'll see if the tech actually holds up, or if it's just a celebrity vanity play.
And we'll be right here to tear apart the term sheet when it drops. Catch you tomorrow.